Go over this trade right here. This closed this last week, but I just want to give a simple breakdown of just how easy it is. It's not hard. The key is getting into the markets. Like you just need to get in and place these trades, place your own trades, whatever it's going to be, however it's going to be. But basically, two candle theory is whatever the previous day is. Mine, I'm going for weekly to 4 hour. Previous week was bearish. I'm expecting the next candle to go bearish. So last week was bearish, or technically 2 weeks ago was bearish. I was expecting next candle to go bearish. Draw up 50% of the previous candle, the open of the candle, simple as that. Drop down to the 4 hour. This is where you sort of clean up that 4 hour area. Stick it around 50%, and if it looks good, it looks good. Candle opened up, came into this area, and then rolled over. So I've been practicing playing with just getting in immediately on a candle in the same direction as it's going to go, as well as extending it about an ATR away from the actual zone. So that was my zone area right there. I had an ATR stop above it and ATR down below it. So this would give me the ability to wait for the market to actually start rolling over in the direction it's supposed to, or if price is going to just blow through the zone and not even respect it, then I can come in and actually just go ahead and close out the trade because it's probably not going to work out. So got into this trade here, let it play out. As you can see, I closed a portion of it down here at 4 something, and then ended up closing on the next day the full position down here before it finally rolled over. That's pretty much it. Mark up your weekly candle, see what the previous week looks like. So you can come and look at, like, if we look at AUDCAD here, last week, I was expecting price to go bullish. It did not happen. Here's where I would have dropped down to the 4 hour, and I would have waited, set up my trade to come up. It never did, never triggered me. It never did anything. And so never actually got into the trade. But that's basically it. Come to your week. Last week was bearish. Expecting this next week to go bearish. 50% there. Come in on the 4 hour. See what that 50% looks like. That looks good. From here, as price got into this area here, we would come here. ATR around this area is about 17 pips. So I would just mess with these for a second. So that would be the entry. This would be the stop loss. Come here. That's roughly what it would look like right now. And according to that, more than likely would have been triggered in there. And then you just let it go. Let it go. If price closes a solid close above this zone here, then you just get out. You get out for a little bit less, hopefully, than what you're actually risking. But other than that, if this week is going to turn around, then what we do here is last week's was 1325 for its ATR. So I'm going to put 1325 there. So this is roughly the distance that these candles travel. And I just want a little bit before it gets to the whole distance. So that'd be roughly a 1 to 2.4. So see how this plays out next week, and then we'll go from there. But roughly, in theory, should be into this trade and see how it goes. But do that for all the pairs. I do it for all the pairs. There are some pairs that I will not trade based upon how it looks like on the weekly. There's some trade pairs that I will stay away from based upon what the 4 hour looks like, if it's just been ranging. But that's just something that I've come to learn, and something you've got to learn. So I would say pick a couple of pairs, get to know them, and then definitely get in the markets and trade them. This is just one of many different strategies you can use to get into the market. The key is getting into the market, finding something to be consistent at. That way you can consistently place trades, and that way you can learn for yourself what works and what doesn't work. Other than that, I got nothing else for you.